Hi students, we're going to spend a few minutes talking about Virginia's state income tax. You probably already know that Virginia does have a state income tax, and of course that's on top of us paying federal income tax, state sales tax, etc. So let's get started so we can see the structure of this tax code. Now, as we said, Virginia has a state income tax. Not all states do. But it does look different than the federal income tax, though. Of course, we're going to see that we have lower rates. We couldn't possibly tax income at the same percentages, right? That would create a huge overall tax liability. But the brackets also look different. However, it is going to involve marginal tax rates and tax brackets just as the federal system does. So you really basically already understand this. We just simply need to know the numbers. So I'm going to start by looking at the 2017 Virginia state income tax for a single person. And so in 2017, you would pay 2% on the first $3,000 of taxable income. So again, it has the same kind of idea of taxable income. You are not taxed on every single dollar, just like what we've talked about with the federal income tax, right? You have certain things that reduce your taxable income. So 2% is the first marginal tax rate. Then you pay 3% on any taxable income that falls between $3,000 and $5,000. So that's a pretty small tax bracket right there. Then we have a slightly larger tax bracket taxed at 5%. So 5% is going to be taxed on any income between $5,000 and $17,000. So we've increased that tax rate, but we've also made the bracket wider, as you see there. Then we jump up just a little bit to 5.75, and that's going to be the marginal tax rate on any taxable income that's above $17,000. And that's where it ends. So our last and highest tax bracket is 5.75. Now remember, does that mean if you have income that falls into this level that you pay 5.75% on all of your income? The answer is no. Remember, because these are marginal tax brackets, just like they are for the federal income tax. So if you have taxable income of, let's say, $50,000, you're going to pay 2% on some, you're going to pay 3% on some, you're going to pay 5% on some, and then you're going to pay 5.75% on everything else. Interestingly, this is the same tax table in 2021. So in 2018, 19, 20, and 2021, we've kept this tax table exactly the same. Now, you still get a portion of income tax-free, as I've already mentioned. I'm going to cover that in just a second, but understand that that means there's an implied 0% tax bracket, and there's going to be some people who never get out of the 0% tax bracket. So of course, if you're in the 0% tax bracket, you would not pay any Virginia state income taxes. So in 2017, you got a threshold, and if you were below it, you didn't pay taxes. If you're singled or married filing separately, you have an income threshold of $11,950. If you have any income less than that, you don't pay any taxes on that first chunk of income. Married filing jointly had $23,900. So people with really low income levels don't pay any Virginia state income tax because they never exceed the threshold. So guys, make sure you understand this. If your gross income is below this, then you're going to pay no state taxes at all. So this is basically akin to how you would calculate your taxable income. If you are single, you would figure out what is your income that's subject to Virginia taxes. You'd subtract off $11,950 of it because you get that tax-free, and then you only pay Virginia state income tax on what's above that. Interestingly, this also has not changed. So 17, 18, 19, 20, 21 used exactly the same marginal tax rate structure with the same brackets and the same thresholds. Now, how do the brackets compare to the federal income tax brackets that we've been talking about? Obviously, you see that they're lower marginal tax rates, right? In the Virginia state income tax, you never pay more than 5.75% on any of your money, right? There were also fewer brackets. We don't have as many stair steps as we do with the federal income tax, but it is still indeed a stair step. So if I asked you to convert this information to a graph, how would it look? Do we agree that it would still be a stair step? But do you agree that that last step at 5.75, that happens at a pretty low income and it just kind of goes on. So that last step's going to be really big. Interestingly, remember that prior to tax changes under the Trump administration, you could deduct your 2016 state taxes that you paid when you itemized in 2017. So that was a benefit. If you paid a lot of state taxes, you could use it, but only if you were taking the itemized deduction that next year. However, this changes with the Trump tax changes that we're going to talk about later. So do make sure that if you were asked to graph this, that you would know how to do it. And if you aren't sure, then you should look back at the graph that we looked at with the stair steps for the federal income tax, because it's going to work basically the same way. You're going to have a step each time marginal tax rates goes up, and the length of that step or the width of that step is going to be determined by the width of the tax bracket. So as we've discussed, Virginia has a state income tax, but not all states do. There are states that do not choose to raise revenue through a state income tax. For example, Texas does not have a state income tax, and that's where I'm from. And instead, it relies on a larger sales tax. In Texas, the sales tax, the portion that goes to the state, is 6.25. Now, we actually pay more than that because some's going to go to the localities and county and that kind of stuff. But 6.25 doesn't seem that much higher than Virginia. Virginia has a 5.3% sales tax. So you might be thinking, wow, it seems like Texas is leaving a lot of money on the table by not having a state income tax and instead relying on that only slightly larger sales tax. But one thing you have to remember, Virginia does not get state income tax from a lot of people. So who is not going to be paying Virginia state income tax? Well, it's going to be those people below the threshold. And so if there's a lot of people not paying state income tax, well, then you're not raising as much money as maybe you think you would. But remember, with a sales tax, these people who don't pay Virginia state income tax would be paying a sales tax. So it's not so obvious that Texas is leaving money on the table by relying on sales tax as opposed to income tax. There are other states as well that don't have a state income tax. Alaska, Florida, Nevada, South Dakota, Washington State, and Wyoming also have no state income tax. I'm not familiar with their tax codes, and I haven't looked it up to get a sense of what they do, but I'm suspecting that a lot of them rely on a larger sales tax, as does Texas. Now, as you saw, Virginia state taxes do have marginal tax rates and they have tax brackets just like the federal income taxes, but it also had a threshold below which you do not pay. So if your income is below that threshold, you don't pay any Virginia state income taxes. So it does mean that there's a 0% marginal tax rate. And we saw that with the federal income tax as well, right? You could be eligible for certain exemptions, deductions. Again, this changes pre and post President Trump, but there was some portion of your income you got at the 0% marginal tax bracket. And same is true for Virginia state taxes. Of course, as we've seen, the Virginia state tax system is far simpler than the federal income tax. There's just a lot less to it. It's a little more straightforward, but it still creates confusion for taxpayers for exactly the same reasons as the federal income tax, because again, understanding marginal tax brackets, well, that's just a confusing idea for a lot of people. So let me know if you have any questions. Thanks for listening, and I hope you guys have a fantastic day.